this video was basically how to make money with forex trading, whether you're experienced or you're a beginner trader, and just basically covering over some just major tips and just some basics of how people are actually making money with trading. So you might have seen people do different trading strategies such as ICT, support and resistance, trend lines, indicators, all kinds of different trading styles. There's no secret strategy when it comes to trading forex or day trading any asset, gold, futures. It's all about your trading session. So when you're actually trading, your personality, and basically the strategy, because there isn't, like I said, a winning strategy. Everybody has different strategies that work, and they're based off of what they happen to learn at that time and how good that strategy works for them. So for me, for example, I've been trading for 6 years, and I actually only got profitable these last 2 years because I had to change my mindset, because I changed the complete way I looked at the charts, in the last 2 years. And yes, like I was saying, the main secret to trading when you're trading on the forex is the charts, because whether you're a fundamental analysis trader or a technical analysis trader, you're a lot of the time you're going to be looking at the charts, because when you focus on the charts, the money translates, because when you're focusing on the charts, all that translates into your lifestyle. Because when you look at MetaTrader or look at trading Trade Locker or any of these brokers or apps, and you focus too much on the profits when you're in a trade, what ends up happening is you get addicted to that, and then it makes you more emotional because you're just staring at the profit while you're in profit, and you become addicted. You're like, oh, I'm gonna make 100. Let's just focus on doing this exact amount per day, and you just focus on the profit. But when you're focused on your actual strategy, that is where the profit is coming from. And so that's why the key is to focus on the charts, then the money will follow. And to maximize your focus too, doing things like whether you're trading forex or futures, showing writing down and making sure you're knowing what the trading times are. Because for me, for example, I trade more forex than anything else. I trade futures and other stuff too, and crypto too, but mainly forex. And I trade the London session, and I also trade the New York session. So if you're wondering where that is, those are the two most volatile sessions. Asian session starts at 5 p.m. in the evening, and it ends at 3 a.m. It is a session that's more slow, and it moves sideways. So the market on the screen, if you're looking at a chart, will move sideways. So from 3 a.m. to 8 a.m., 8:30, from 3 a.m. to 11 p.m. to 12 is the London session. And the London session actually overlaps the New York session. So the London session, sorry guys, cleaning. So the London session is, it's if you wake up early in the morning and you don't have to work around then or early, then, or actually, if you have to work early in the morning, then the ideal session to trade is the evening session, or which is the Asian session, or you want to trade the London session, because the New York session starts at 8 a.m. and ends at 5. And so if you're at work between those hours, it's not going to really work for you because you're just coming home at 5 or 4 or 3, depending on your job. So I would say you can still get in at New York session if you work and you get off in the afternoon, because that New York session ends at 5. So if you get out before. So knowing those sessions, focusing on your strategy and being consistent and improving on that, because that's the whole skill set. The whole skill set here, and why you see that screenshot of the money, is based off my strategy. Whether people tell you it's about this or that, and also your mindset is very important, because that's how you do the strategy. Because a strategy can work, but if you're not showing up to the charts, if you're being an emotional trader, if you're not being consistent, or if you have poor risk management and things like that, then the strategy isn't going to work. But if you're, like I said, a new trader, you're basically making money. Let's say forex is different currencies, right? To make money in this market, like for me, I buy low and I sell high. So when I'm buying something and I know there's demand in an asset, like let's say the currency of Europe, I'm going to buy Europe or the euro when it's at a lower price than when it's at a high price, because that makes more sense, right? That's why they say buy the dip, because when you want to buy the dip, prices are always going to be, sorry guys, the prices are always going to be cheaper because, sorry, huh? Because when you're buying something, the dip is usually at the lower part of the range. So like for example, if we look at this, if we look at I'll just draw it for it. I'll draw this example. If we look at a chart and it's going up, down, up, and it's at that high, that's most likely where you're going to see the prices turn green. So you're going to see on the news, the stocks are green, the forex is green, everything's green. And that's where the FOMC, which stands for fear of missing out, happens, because most people tend to be greedy when the markets are green because they have this connotation that the market is going to continue doing upwards, which it will, but they fail to get in at it's the timing. So what I mean by timing is the fact that, okay, yeah, it's going up, but a healthy market goes up, down, up. So you can't really buy something when it's already at a high price. It's like, imagine buying the iPhone and you want to sell that, you want to sell your iPhone, right? Would you rather sell your iPhone at a more expensive price or a cheaper price? Obviously more expensive. So the whole idea is, if the market is going up, you want to buy at demand zones. So you want to buy, those demand zones represent price levels / areas in the market, which can be coordinated through the numbers on the left side of the screen you're looking at with those numbers on that column. Sorry, the right side. Those are coordinates basically that stand for, and those prices, those different numbers are different levels that you can trade at. So you know, notice how the numbers on the left side, sorry, the right side of the screen, right here where I'm pointing this gray arrow, where the gray arrow is, all these numbers, if you notice, as I go up, the numbers get higher, and as I go down, the numbers get lower. So if the market is going up and it's bullish, you ideally want to enter at a low price. And to determine which low price, because there's a lot of low prices, you have to determine your actual price range. And to do so, you want to do like this. So if price looks like this, right? So that white line I just drew, and the market looks like that, right? What we're going to do is we're going to identify our market structure. So obviously the market is going up because it looks like it's going up, right? It's doing that. So what we're going to do to confirm it and to be precise so we can actually trade this is we're going to actually take our tool here, called the line tool, the trend line, and we're going to mark up our current price range, because we need to do that to determine where we're going to make money and where we're going to place the entry for our trade, right? So identify the current high, which is here, which is that red line, and the current low, which is here. Those two levels, those two lines I just drew, represents the high and the low, and within it is the range. So let's finish the rest of it. So we have a previous low and a previous high. So in total we have 4 pieces of market structure. And this structure, what does it look like? It's going up, it's structuring up, so the trend is up. But the problem is, here's the problem. Sorry guys, here it is. Here's the problem. We need price to actually come down, like I said, because where is price right now? So price right now, yes, the trend is up, but price right now is right here, it's high. So we want to actually be patient, and that's another thing to forex. The key is to be patient, because you can't just get in when you want to. I mean, you can if that's your strategy, but these markets, it's not make-believe. The people that control these markets are the banks and institutions, because they have the most capital. And whoever has the most capital and moves the market, that creates volume. Hence why the news is important in forex, and to paying attention to the news. Because if you're a trader that doesn't trade smart money, and if you're a trader that just trades your own strategy, maybe you trade trend lines, indicators, which is fine, you're trading based off your own biases versus the news and actual economics that's powering what you're looking at on the screen. And so because of that, you actually have to be careful when you're trading, and then you have to watch out for the news if you don't know what the news does, because the news, like I said, whenever there's news in the market, whenever there's orange or red folders, and what I mean by orange or red folders is orange and red are the colors that stand for the volatility, which is how much the market moves. That's what we can think of volatility as. So when you see someone say this market is low volatility, this market has low volatility, it means it's not moving so much. So there's not a lot of, it's like playing an Xbox or playing a PS5 or a game. There's not a lot of people online. There's not a lot of people active online in the market when there's low volatility. So we make the most money when there's people online in the market, which is when there's high volatility, right? And so the volatility creates movement because there's people online slash capital in this case. And so um, the market right now, like I said, is up. And so what we're going to do is use a tool called the GAN box. And this tool is our tool we use to divide the market in half. To divide the range in half so we can determine which side of the market we want to buy or sell on to make money. So what we're going to do is take out this tool, and we're going to drag it and click on the high we just drew on that red line where the arrow was pointed to, and then we're going to drag it all the way down here. And once we do that, we are going to actually wait for we are going to actually wait for price to come back down. And here's why. Okay, so you see how there's green lines that I just drew on the screen. There's 3 of them. And since we're buying, we want, like I said, we want to buy at the dip. So we want the price to come back down. So the area that represents the where we want to buy in the market to make money today is this area that I'm shading in right now on the screen if you look on the screen. And if you still can't tell what I just did, that's where I just drew where the arrow's pointed to, right? Okay, so we want to wait for price to basically do this, to come from that high at the top of the range into the bottom where that gray area is, and the circle I just drew is the area, and this area is called our premium level. Sorry, it's called our discount level, because the discount level is where prices are cheaper. And the reason why is if you look, like I said, to the right of the screen and you see those numbers there where the arrow is pointed to, you see all these numbers, where the gray box is where the numbers are cheaper. So you'll see numbers like 155 to 154, and that's for, in this case, would be where we want to, the prices that we want to look to trade to buy to make money, versus buying at the top, like I said, where people are greedy, where it's green, which is where the prices are expensive, and we call that premium price, where it's high. And so that price is at 156. The high is at 157, and yeah, it stays above 155.600. And then the cheap prices are 155.100 and 154.500 and lower. So we want to buy at the cheaper prices. And like I said, once price comes down, we that gray box actually represents what I trade that's called a POI, which stands for point of interest. So areas in the market that we are interested in trading in. And these areas that we're interested in trading in, for me specifically, are supply and demand zones, such as imbalance gaps. Like I said, that imbalance gaps which happen when the market doesn't have time for a pullback and healthy movement downwards before going upwards, or upwards before going downwards, or a order block, which is, we talked about that in other videos, which are basically 2 engulfing candles in the forex market, engulfing candlesticks that are filled with large sums of capital injected into the market by a bank or an institution or a large player in the market, showing you that they're getting ready to enter in the market and entering in at large positions, because it literally shows you how much volume is in their position in the market. But yeah, guys, some of this might be complex if you're a beginner, and I know it's kind of like a mixed talk, but I just wanted to go over with some simple things that would help. So the step-by-step thing, what I would recommend for you guys is study your strategy. Step number 1 is identify 7 to 8 pairs, forex pairs. So do like I do, add all the pairs of forex on TradingView on your watch list. So just click add and add every single pair, and then make it into a section, okay? And once you do that, then you're gonna choose 7 to 8 pairs from that section. Out of all the forex pairs that exist, only 7 to 8, you're gonna choose those for your week. That's gonna be your weekly pairs, and those pairs are based off the news that's coming out. So if we head over to like a site like Forex Factory or something, you would basically look at the news on this site, because this is an economic calendar, and basically this would show you the news, the calendar, the events that are happening this week. So NZD stands for the New Zealand currency, AUD stands for Australian dollar, US dollar, and so we will be looking for pairs that have that currency in it. And so you would choose 78 pairs for the week based off what we just saw for the economic schedule, and that's how I trade. And once you do that, you can then identify uh, your market structure, which we just talked about, your range and the trend. And once you do, you would do this on Sundays, because Sundays is where you want to clear out your charts and start new and do your analysis for the week. And we want to also set alerts, so you don't have time, let's say, to wait for price to come to a certain area that you have to trade on the chart, like we just talked about with the gray box and this drawing here you're seeing. If you don't have time for price to actually come to your entry zone, and you're not gonna be on the computer or your phone, set alerts, because TradingView has a thing where you can set 1 to more alerts if you have the pro plan, and those alerts allow you to be notified when your trade is happening, so you don't miss it. And then you can set these orders where you can set orders where your trade will automatically enter in when it gets there and stuff like that. But yeah, guys, I just wanted this to be a short video for you guys to get a little bit of information, because I don't want to shove too much, because then you're gonna not actually learn anything. So I want you to learn a little bit at a time, and then come back tomorrow or whatever and just study a little bit you learned today. And yeah, just keep it simple. But yeah, I hope this video helped. Peace.